Hello folks, welcome to Pro Trader Strategies Market Commentary for Wednesday, April the 28th. I'm Eric Wilkinson, and some of you very well may recognize me as the Wolfman from mainstream media, where I talk about the economic data, the geopolitical environment, and how those come in to impact the markets with some of my market analysis. I do the same thing in these daily market commentaries, but I also talk about my option strategies that I'm implementing in my portfolio based on any given assumption I come up with in my market analysis. And for you folks, we've gone a little bit further and created webinars to streamline your process in order to find the optimal option strategy for your given assumption. What we've done is we look at the pricing, and that is ultimately going to determine our option strategy. And I show you how to spot that option pricing really quickly to know whether it's expensive or cheap. So we talk about that in those webinars, so please check that out at Pro Trader Strategies. All right, let's talk about the economic data across the pond. Not really a whole lot going on there. So let's move back over here to this side of the pond. Canada retail sales really coming in nicely over what was expected there. I don't talk a lot about Canada, but their retail sales, core retail sales as well, coming in better than expected. Here in the United States, on the flip side of that, we're seeing preliminary wholesale inventories build. 1.5% expected to only build by 0.5%, and they revised last month's number, albeit only 0.1% higher. But we're seeing wholesale inventories build. This isn't a time where manufacturing companies are trying to build inventory, folks. All right, this would be a time where they're trying to move inventory. Later on, heading into the fall, that's when they're going to start building up for the holidays. Not right now. So a little bit disconcerting there. We're seeing the wholesale inventories build a little bit. All right, crude oil inventories, about 1 million over what was expected. It was supposed to be a drawdown of 900,000. It was a build of 100,000, so it missed by 1 million on the build side. So 2 months in a row, we're seeing bigger than expected builds there on crude oil inventories. We also had the OPEC guys really not coming to any consensus really whatsoever. So still kind of batting it around. Today, finally, we got the FOMC meeting later on this afternoon. Interest rates are at 25 basis points. They're going to leave them the same. They're going to talk about inflation. They're going to let inflation run hot. Nothing's going to happen here, folks. It probably is really going to be in the statements that we hear afterwards that's going to be driving this market, because the headline stuff, I think, is going to be a snoozer. All right, so despite the fact that we've got a build in crude oil, we're seeing crude oil rally today, up another dollar, right in that 60 handle solidly at this point in time. All right, Bitcoin is up $30. Oh my gosh. That could be the smallest incremental move higher I've seen in a very long time on a trade day. Tight range today in Bitcoin, so really quiet there. Gold futures are moving lower today, but well off their lows there, as you can see. Yesterday, after testing our Fibonacci, it's not even a Fibonacci, but our support and resistance line here, trend line. Keep in mind that has acted as resistance time and time again. Yes, it doesn't line up with anything, but we have a line that we found some support on. It is acting as resistance, and yesterday it just failed on that, staying above there. We are seeing some support here. We are above the 50-day simple moving average, all right? So that is still bullish, right, for the longer term there. Bonds are below the 50-day simple moving average. I think the Fed's going to talk about not raising interest rates. They're going to even let inflation get a little hot here, even going into the roaring 20s, where I think that we could see some inflation start to ramp up here in the roaring 20s. If people start spending, right, that's going to drive inflation. But that's further down the road than what the Fed is looking at this point in time. So right now, I don't think they're going anywhere. So I think bonds are a little bit overdone to the downside, have some room to the upside. Still, like a broken record saying that. All right, let's talk about the equities. We've got the NASDAQ off by about 32 points on the day. E-mini S&Ps are, the broader markets are down. Dow would probably be higher on the day if it weren't for Boeing, Microsoft, that we got earnings from, and I'll talk about those here in a minute as I was trading those. But really, there's three main stocks driving the Dow downwards, and those stocks are probably at really good values, folks, if you're thinking about adding something like Microsoft, Boeing, because they're getting beat up. We'll talk about that here a little bit more. I'm going to spin through all of this to get to the markets. And you can see even the S&P is only one at this point in time that are positive on the day, but some real weakness throughout the markets. There's a couple of the FANGs are doing well, folks. We also got Apple coming out, eBay and Facebook, part of those FANG groups, but so far the FANG's doing very well. Another one, Google, coming out with better than expected earnings. So let's just get on with the markets here, right, folks? Let's just talk about it. Actually, let's start off with Boeing. Boeing coming off a little bit today. I have on a long call spread in here. You know, there's no volatility in and around most of these earnings. Yes, volatility is expected to come out after earnings, but when you don't have any volatility already to start with, it can't come out a whole lot. So some of these strategies, I don't usually go to earnings strategies where I'm buying call spreads and things of that nature because of that volatility crush, but we're not seeing volatility, so I'm rejiggering some of this trading thought process for this particular earnings cycle. And in just in this case here alone, I went into the July. Usually I'm going into those weeklies, right, for an earnings, but this is the longer duration. I've got about 80 days to expiration and bought the 245 calls and sold the 270 calls in there. And I paid right around $8, and I think it was $8.25. Obviously, directional move is not in my favor here. Volatility, yeah, it came out a little bit, but it's not really hurting on this strategy at this point. I'm doing okay right now. So I did it for $4, and the Boeing trade was $8. I paid $8.40 for that trade. Not working out right now, but I'm going to stay with this because I'm still bullish in Boeing. I'm going to have a short leash on it, though, folks. I'm not going to pull the ripcord on it just yet, so we might get a bit of pop here with that reopening kind of roaring 20s, people wanting to travel. I've got 70, 80 days, so I'm not too concerned about it expiring or that theta decay so much. I also did it as a spread, so I paid off a lot of that. All right, and then let's just go straight into Starbucks. Starbucks got out early this morning. We got a bit of a bounce in this market since the open. I put this trade in before the market actually even opened, just to get hit on it if we sold off a little bit more. So with Starbucks, I went into the July also, and I was buying puts because look at this volatility. Yeah, out here it looks like it dropped a ton, but it really dropped only right off the off the open. It didn't really sell off that much. It was only a couple percentage points right away. It held on to some of that volatility. It kind of leaked out as the day drug on, right? But at the beginning of the day, that volatility held in there, and it was probably because of the bearishness in the market here. So I went into the July and I bought the 115 puts in there. Bought the 115 puts in here for $4.65. I got out this morning at $6.50, which was the high right off the open, and I bet that the high is still in there. So one of the few times you get to say you sold the high, I got to champion that. Somebody picked me off. Not really, but so got out of those Starbucks. I actually did that trade because I did it as a buying a put. I actually put that into my into my IRA as well. Funny story, last night I actually missed out on doing a couple of earnings trades. Yum Brands I was thinking about doing, but anyway, I accidentally put in a over fat finger a little bit sized trade in my IRA, and got out of a few of those just to lighten to the normal tranche because I went way too big for my IRA. And of course, those were a huge winner. A friend of mine used to say, the trade that makes you the most nervous makes you the most money. Well, in this situation, I was just too overweight in my portfolio on one given trade. No matter how sure you are about a trade, don't ever go all in. And I lost I think 5 cents on that trade where I got into too many. and had to shave my size. So, you know, we all make that. We all make those same mistakes, right? I mean, that stuff happens, and you know, you got to do what you got to do, right? Also, AMGN, nice little win here on AMGN. Come on, AMGN. There we go. Played this to the downside as well in AMGN, and I had sold the weeklies. I did the weeklies in this for the April that expire on Friday, and sold the 265 calls for 74 cents. I bought them back for 5 cents this morning on the sell-off, selling calls against that. You know, one of the things with this trade was with AMGN, didn't have a real directional theory on this. One of the few ones that actually had a high enough implied volatility. You can see it was actually near the lows, but at the end of the day, I knew volatility was going to come out. It bounced off of that lower volatility coefficient, so I thought we might be able to revisit that. The other thing is with those calls, right, I was able to get great strike location. There was a day where we got a big spike up there, which was a little bit crazy. So strike location above this area where we would find another bout of resistance, I was sure of. So get above that a little bit. That was good strike location on it, high volatility. So even if the market started moving there, I felt like I would be able to get out. So I was able to get out of those for a nice little 5 cent profit there. Sorry, getting a little long-winded here, talking too much. Talked about Starbucks. Oh, Microsoft. Microsoft. I mean, come on. It's like we're going to be talking about Microsoft. Dyslexic. Like IBM. All right, Azure up 60%. I mean, that is like IBM's cloud services, right? I've talked about this time and time again. People are hating on IBM for building out this cloud services. It's huge margins. And same with Microsoft, up 60% on Azure. That's their cloud services, folks. That is high margin. They're doing very well there. The AI, all of this, they're building out this infrastructure, which looks like it's a bit of a drag on their capital, right? But folks, they're building these server farms, and those carry value. That's why it's not going to cost them anything going forward. So very good on the numbers. I want them to sell this off even more. I'd be happy to buy it at $250. Come on, folks. Give it to me. Anyway, I did the April weeklies, which are going to expire on Friday anyway. And I sold the 250 puts in there, which is why I said, hey, if I'm short puts, that's where I'm willing to buy it. Put it to me. I'll be happy to get long Microsoft going forward here. Despite the fact that it's near highs, folks, these guys are doing very well. Especially LinkedIn was doing well. Obviously, with 10 million people unemployed, they're probably getting some people signing up for some services there as well. So the Microsoft I'm not out of on those 250s. I collected 75 cents for that, and right now it's trading around 50. I haven't gotten out, like I said. I'm gonna let them put it to me, if you will, or collect the full credit on that trade and walk away a happy man. So out of AMGN, out of Starbucks, out of Microsoft, Boeing still in, or actually not out of Microsoft or Boeing, but out of the AMGN, out of the Starbucks, two other trades that I've still got on from those earnings trades, but I'm going to let them ride for right now. That's all I got for you guys. Sorry, I tried to get this out a little bit earlier, but some workers had to come in, and it was pretty loud throughout the house, so I didn't want to shoot that and have you guys listen to the pinging and the pounding. All right, so that's all I got. Take a moment to go over a disclaimer. Also, smash that like button for me, if you will. If you've taken anything away from this, or if you enjoyed the content, please let me know with that feedback on the like button. Also, questions, comments, or anything else, throw it down in the comments section. I would be happy to go back and forth with you there. Make sure you're clear of concept. Love to hear from you guys. Let me know where you're at. Finally, if you can't take that, take it easy.